So we have two powerful areas in the market. We have the ERL, which is the external range liquidity, also known as highs or lows. And we have the IRL, also known as internal range liquidity, also known as POIs or FVG. Now, the summary of everything ICT is you trading from ERL to IRL or from IRL to ERL, depending on what you meet when you come to the chart during your trading time. I'm sure it makes sense to you now. This video will teach you how to enter trades to the right direction. If you come to the chart and the market is at an IRL, it means you're trading to an ERL. If you come to the chart and the market is at ERL, it means you're trading to the IRL. The video will teach you the best timing to use, how to get into the trades, where to put your stop loss, where to put your TP. Watch till the end and learn. So when I mean time and price, you have to take into consideration the timing you come into the market, which I'm going to recommend. The ideal time in Nigeria is currently, when I'm making this video, is 1 p.m. till 5 p.m. You know, we have moved 1 hour ahead. So by March, everything will be back to 12 p.m. to 4 p.m. That's the time you want to apply what I'm going to teach you. And then when I'm talking about price, you want to ask yourself, what phase am I? So if you come to the market where price just took out an ERL, you know you're in the phase whereby you're going to trade towards the IRL. That's it. So you want to know the phase you are in. Now, if the phase is where you should trade to an existing FVG in the range, then you apply the entry model at this time window. So you want to come at this time window and see what phase you are. If you come to the time window and you see that the market has already moved to IRL and is pulling away, you know the next draw is going to be ERL, and you want to come that time and apply the entry model I want to teach you. So examples, let's go. So this is a very clear example I want to use to make this. So on this price action, what we can see is the price took out ERL here, and then it started trading back into the range, and it decided to cover this fair value gap. ICT will call it CB, which is sell side imbalance, buy side inefficiency. CB price covered it and was chasing the next area. So all I want to teach in this video, I'm not going to teach you really how to trade from IRL to ERL, like how to determine direction. I'm not going to go too deep, but if you want to know it, you watch this video right here on the screen. You go and watch it. But this video is all about entry, so I'm going to show you when to come to the market and when to enter. So you're coming to the market by Nigerian time. uh this is October. This price action is October, so it's going to be Nigerian time 12 p.m. when it comes, because the 1 hour difference shifted since November. Okay, so this is October price action. Now I know the market is drawing to this high, so all I want to do is apply bullish entry model. And what's the bullish entry model here? So these are the two things you want to do, as simple as that. So 1 hour verified POI below midnight. First of all, the midnight I'm talking about is 00 hours Eastern time. So when I say midnight in Nigerian time, midnight is 6 a.m. as at when I'm making this video now, which is November. But in October, no, we're 1 hour behind. So in October, it's 5 a.m. That's midnight. So that's the first thing you want to go and mark. Okay. I'm using this day as an example. So let's go and mark it. Midnight, 5 a.m. 5 a.m. This is it. So you want to mark that with a thick green line. Now I'm actually showing you how this day actually exploded higher, because this is a major draw. All these demarcations I have is different day intervals. I'm not making an example with this because this day refused to buy during our best session, which is in New York. So I'm gonna start showing you from this day, because you want to know how to apply this thing. So you need a clear market structure where it works, so I can see how it works and then go and study. So this is my midnight line right here, and I'm going to write it there, midnight, MN. Let's write it there. MN. So the next thing I said, 1 hour verified POI. So what point of interest can we see below this midnight on the 1 hour? Right, we saw this sell side liquidity resting here. So that sell side liquidity we saw resting here, I'll just make this blue. That sell side liquidity we saw resting here, we don't have any other POI right here. Okay, so I can't use an order block here because there's no proper break of structure. Okay, neither can I use this FVG because price has been deleted before. So the best thing to use is the sell side. And when price ran it, what time did price run it? 10, which is not 12 p.m. So this was attacked before our kill zone. So what happens is, in a case like this, you want to chill when, as long as New York has started, which is 12 p.m. has started, you want to go to the 15 minutes time frame and look for a POI below midnight, no more 1 hour POI. It's not going to be a 15 minutes POI. Remember, the only reason you do this is when the 1 hour point of interest, the verified 1 hour point of interest, was run or mitigated before trading time. What do? During the trading time, you want to use 15 minutes POI below midnight. It just makes everything easy. And when I say a verified POI, I mean a POI that has been refined to the lower time frame. So now this is a sell side graph. So let's verify. Let's check if it's useful. So all I'll do is I'll go on the, let me replay this. I'll go on the 15 minutes to check it out and see how verified it is. As you can see, it ran this place with a wick. Right, all the candles closed above the line. That is 15 minutes is a support of this. And then when you check the 5 minutes, price actually ran it without closing below, except here. So we want to check to the left hand side if there was something that price came to mitigate. That's what I'm trying to check. So I'm seeing another sell side here. Maybe if price actually went a bit lower to mitigate that, we would know. Let me extend it. Okay, for the 5 minutes, price went lower to mitigate to run is another sell side, and then it still closed above this one perfectly. So it means this place is correct, like this place is okay. That's what it means. It's protected now. So when our New York starts, this is when our New York starts. Take note of my pink indicator. My pink indicator is my New York time. So all I want to do is use a 15 minutes POI below midnight. This is my midnight line. So this is the fair value gap. We have to go and verify whether it's actually gonna work or not. So inside that verification, let's look at this properly. So we find out that price went inside an FVG2 on the 5 minutes, but went a bit lower. So let's see the 3 minutes time frame, whether there was anything price came for lower than the FVG, like serving as a support. So we find out that there was this other block right here that price came for. All right, that is fine. So the rule says 1 hour verified POI, which, like I said, if such thing has happened before the Q zone, it's not going to change to 15 minutes verified POI. Now, remember the rule said we should have to look for 5 minutes market structure shifts or turtle soup. Now, because 15 minutes is the main POI we're working with, then the market structure shift time frame will go to 3 minutes, no more 5 minutes. And about turtle soup, we only use turtle soup when the low that was run or the POI that was mitigated is a time-based liquidity pool, more like an Asian low, Asian high, London low, London high, previous day low. But outside that, we don't use turtle soup in any way. So you see how price is reacting from here. Now, one of the ways I get into my trades is I want to see the market structure shift from here. So I think we had it around here when the market closed above. That's where we have it. So this is the way I enter my trades. I'm going to put my stop loss here. So I'm not going to enter directly here, depending on how my target is and where my target is, right? So to get my target correctly, I'm going to go to my 1 hour time frame. Where am I going to place my TP, my target? What am I going to be expecting? Because I want to make sure I don't go below 2.5 hour. All right, so this is my anticipated TP. Now, how do I TP? I TP at closest 1 hour highs. I can TP at this one if it gives me a 2.5 hour, or this one. Now, this high here is the closest POI to where I am. So what I'm going to do is, and I want my minimum IRR to be 2.5. What I will do is I'm going to go back. I'm doing all these things before the whole thing has formed. I'm trying to calculate where I am from my stop loss, from my distance. I'm trying to calculate as I can get my 2.5 R. So what I do in this case is that I would reduce my entry a bit so that the price eventually returns back to it. I'm going to um, you know get into the trade. Now price might not return back, and that's fine. But I want to get my 2.5 R. Reason is because losing streaks happen, and whenever you win, you want to maximize it, because if you don't, every losses will always take all your wins. So you see how this one literally how I entered it and everything. So if you have always had issues with daily bias, whereby you can't just get your daily bias, you really struggle to get that daily bias. So what happens is you lose because you're trying all your entry models, but it's going hair away because you don't know whether the market is going to end up going up or down, whether daily candle is going to close bullish or bearish. Well, the mentorship is available. Now, with the mentorship, I'll teach you how to know what the next draw is for every single day, every single session you trade, how the daily candle fall. That's that's precision and analysis you'll be taught. And when you are done with 30 days of that mentorship, you're going to see lots of changes in your trading. You will know how to apply these entry models in the right way. Click on the first link on the description and directly DM me on Telegram with Forex, and we're gonna talk, and I'm gonna fix and diagnose where you have problems with trading. So let's go to the next day example, because for some days we could keep looking for bullish entry models, because we know this is the draw. This is where we are drawing to. So the next day we just come and apply the bullish entry model. That's just how to do it. Until we have crossed here, we'll now start when price crosses this line, like boom, we'll now start looking for a change of character on 15. And that's how we'll keep looking for sales this time. See, we are back into the range. That's exactly how to trade ERL to IRL. Summary. So new entry, new day, new entry. Wait for our what's trading time, which is our pink indicator time. So let's wait. This London. We are bullish today. We want a bullish idea. So now it's our time, our trading time. Now our first thing is we have come to the chart. We want to look for 1 hour POI that was mitigated. So as you can see, you see that we have this low that was run. There's a sell side was run by the markets, right, during that time 10 a.m. instead of our normal 12 p.m. So what does that mean? Let's go and verify it first and see. So we'll go to 15. You find out that price closed below. Okay, price closed below, but somehow price got into a fair value, an order block here. I seen it, and that's what price mitigated. So if you go to the 5 minutes to check, you also find out that it's actually the same. There's an order block here, even a smaller one at that, and price does what price mitigated. So it just tells you that this place is protected. So price is not going to run there again. Instead, we'll wait till what, when it's New York time, let price go below midnight and enter a 15 minutes POI. The same thing we did yesterday's the previous day. The same thing we are doing right now. So where is our midnight? You forgot to mark that real quick. So let's go to the 1 hour, so we can easily mark our midnight, which is 5 a.m. Nigerian time. So 5 a.m. Nigerian time is going to start here. The opening price of this is going to be here. The opening price of this is going to be here. Make it bold and make it green. That's how you know that's my midnight. So all I want to see is I want to see the markets. Okay. So I want to see the markets, the 15 minutes especially, go below this midnight time. That's all I want to see. Now, if it doesn't go below midnight time and it later gets to 1:30 Nigerian time, which is 8:30 Eastern time, if it doesn't happen and it gets to that time, we're going to use the 8:30 opening price as our new opening price to work with. We'll ignore this one because this one has already been used. So we'll ignore it. So let's check when it got to 130. Now this was when it got to 130. This is the opening price of the 130 candle. And I'll label it 130 Nigerian time, 130 p.m. That's opening price. And then price went right below it. And when price went right below it, we started reacting from this rejection block right here. We saw this one. Okay, there's a rejection block we have right here. And for me to take rejection blocks seriously, I like refining them. Okay, so that I can know what they are on the lower time frame. And here we go. It's actually what an order block on the 1 minute. So it means the rejection block is valid. And on the 5 minutes, it showed up as a sell side liquidity sweep is there. Sell side liquidity sweep is there. Make it blue. And on the 3 minutes show that that's also a sweep. So everything is perfect. So what do we wait for? A 3 minutes market structure shift that we can get in. And the market structure shifts happen around here but did not close above. I want it to close above whenever the market structure shifts happen. If it doesn't close above, I don't want it, right? So this is when it closes above right here, and that's where my entry is going to be. So for instance, I'm going to enter here and put my stops there. Okay, so if this is the case, where is my exit going to be? I like exiting at close areas of the market. Close highs for the data. I don't hold trades too long. So let's see. I'm going to exit at that point, right? If I exit at that point, that's about a 2.73 R, which is above my minimum RR, which is really good. And that's exactly how I do it, right? Which is the closest 1 hour high. You guys will just stick to that. I don't know if price got there later or hit break even, because by now I should be break even. Okay, it hits later. All right, so that's it. We'll move to the next day. Keep applying the entry models. I hope you're learning. I hope you're enjoying this. All right, so it's a new day and we have not taken out this ERL. We are on our way to take it. So we are going to apply our entry model. So my pink time is when we get to the chart, which is 12 p.m. And considering the rules we had, the 1 hour POI. Now let's check, was a 1 hour POI ever respected before we came to the chart? So that we would not keep expecting anything. So I think we have this sweep right here, but then let's go and verify it. Okay, let's go and verify. Okay, on the 15 it was also a sharp sweep. On 5 minutes it wasn't, but then price got into an order block here which verified it. Okay, nice. It actually still went below the order block and ran the lower SSL here. Okay, it's not bad, right? So we have actually confirmed that this 1 hour sweep is solid. So what I want to be doing is just get my midnight time, which is going to be 5 a.m., which is this, and I'll make it thicker, make it greenish. All right, so by once my New York time starts, I want to look for that POI by 15 minutes. Okay, so what happened is, as by the New York time price just ran this whole list that the 1 hour has already done. Price just ran it so fast, so it means we chose a new 1 hour POI, and that's okay. So what happens is we go to 15 to verify that's clean. We go to 5 minutes to verify that that's actually a sweep too. That happens to be a sweep, so everything is clean. So how do we get involved? Now another way I enter trades, to be precise, is that if I don't see a market structure shift on time, but I saw a big ass candle carrying an FVG, I'm gonna take my trade because that shows volume right there. I don't need to wait for even price to come back to the FVG. I just want to see the FVG from. I want to take my trade and put my stop loss. What actually changes my RR for me is if I check from where I am to current targets. If I check and I'm not up to like 2.5 R, I'm going to reduce my entry. That's exactly what helps me. So this is how I reduce my entry to make sure it's up to 2.5. So if I get tagged, fine. If I don't get tagged, fine too. I got really close. Maybe I will not get tagged again. Okay, I've gotten tagged, and that was it. That's exactly how it was, and boom. Now, that's exactly how to take trades, and you've seen the whole principles. Now, let's see bearish markets, because the markets will start retracing lower. Like I told you, when you come to the charts, what phase are you? That's actually time and price. Time is when you come to the chart. Price is what phase are you? We were in the phase of moving from this ERL to this one, because no IRL in the range could hold price to go lower again. So it's basically this happening. We'll have to keep buying until we run here. But when we run here, we wait till we have a 15-minute change of character. That's a sign that we want to trade back into the range. And that's what you need to pay attention to and start catching the sell, the sell trades. So not wasting time. Not wasting time. All of these days that we're trading up, you're not going to get yourself involved. This and this, no drama. And then when price start trying to pull back, trying to reverse, this is the first sign. The first sign is when there comes a change of character on the what do you call it, on the 15 minutes time frame, right? That's exactly when what's the word, you can start looking for massive sales, right? So on this day, we're going to look for sales, right? And we need price to go above midnight. The previous one was below midnight. Now it's above because you're selling. I want to sell high. Okay. So in this case, what do you want to do? You want to mark your midnight so you can be very sure where you are. 5. Okay. So I was expecting that price goes above this midnight line I just marked here. I'm betting that price goes above it for the drop, but it did not happen. So we let today slide. That's trading for you. You're not gonna do everything you want every single day. So you let it slide. Then we wait to hunt another day. Okay. So we are coming back into that big 4 hour range I showed you. We are trading back into the range. And if you go to the 4 hours and peep how the range is, you find out that there is nothing to anchor. Like there is no good IRL, because it's ERL to IRL. We have taken ERL, we are supposed to trade back to IRL and then back to the higher ERL. But this is a way here is where you literally keep sinking until you get to your last line again, which let's see how the next day is going to go. Now we don't have any perfect POI here, no perfect order block, nothing. It's just sell side liquidities everywhere. So I have my eyes on this one, and what I'm going to do is what, apply the entry model. That's it. Apply the what, entry model. So the entry model, that's not today because today is already over. So we'll play it till another. Now, just for reference sake, now it means we are bearish. So all we have to look for what is, first of all, midnight, and then bearish setup above midnight. So this is, sorry, bearish setup that goes above here at midnight. Yeah. So this is our midnight line. So all I want to wait for is our trading time, which is the pink indicator, right? So during our trading time, what's the first step to get our entry? Look for a verified 1 hour POI, verified one. So I just saw one that was here and price, you know, as you actually took it out, price needs to drop. That's my point. Price needs to drop, and this is what we do. That's the buy side liquidity. And what else is, we want to go and verify it. Yeah, it's actually a sweep, and this one is not fully a sweep, is it? It's not fully a sweep, so we want to check around what it mitigated. It did not mitigate anything, it just went up and closed with body. So in cases like this, what I want to do is I want to short, but until when price takes out this low. Okay, I want to short, but until when price takes out that low, so I can be as safe as possible. Because if price sweeps liquidity and does not and closes above, I need a pure change of character to trust it, right? So this is exactly how, you know, where your TP is supposed to be. the TP is supposed to be here, trust me. But now, because of this large stop loss, all you want to do is to wait till literally what's the word? Let's go to 5 minutes and look at it again. So you can wait, let the chalk happen. You can wait, let the chalk happen, and then you actually get your entry. So my entry remains 2.5. I'm trying to make it as rigid as possible. Or I still make it 2.5 because it's 2.26 now because yep. So I want to see the line break first, then any retracement with my entry, now it's good. So if that doesn't happen, so guess what? We had a higher sweep again. We had a higher sweep after that, and that higher sweep we had, if you check on this listen, we actually still close with a body on 15, which is strongly making me consider that this blue line has to get broken before we can trust anything going on. Okay, now we have broken through the blue line without any sell stop idea. Feel me? None. So with this, I know it's either I miss the trade or try to trace back because I actually do not plan to. Now we are retracing back to entry. We might not get tagged in and we might just get left out. And that's actually trading for you. That's actually trading for you. But what I need you to get in this idea is that you just do the same damn things. And I hope this video helped. You know what to do. Give a like, and subscribe and share the video. You can watch it as much as possible. This entry model is everything that changed my trading for me. Have your framework and what you do, and then apply it. If you don't have any framework and you're confused on how to get daily bias, then you know what to do. Watch this video. This video is going to help you explain more about IRL to ERL kind of trading. See you guys in the next video. Peace.